This is CryptoCake Weekly Update with BitBoy Crypto.
Welcome to CryptoCake Weekly Update. This week, we're going to take a look at the ongoing war between miners and developers of Ethereum. Bitcoin's price hits a new all-time high. Microstrategy is buying more Bitcoin. And finally, U.S. lawmakers seek clarity on cryptocurrency regulations bill. Today's biggest story, miners continue threatening to attack the Ethereum network with a show of force. To briefly recap, miners that oppose EIP 1559 have threatened a hash war for 51 hours, symbolizing a 51% attack. The miners vow to redirect their hash power to one single pool, ethermine.org, on April 1st. The Ethereum proposal is set to take effect in July of this year. As part of the upgrade, a part of every transaction fee will be burned, reducing the overall supply of Ethereum. The proposal is expected to put stress on miners' revenue, with some estimates suggesting a massive 50% of lost funds. Miners have countered EIP 1559 proposal with their own entitled EIP 3368. EIP 3368 aims to first increase block miners' block rewards from the current 2 ETH to 3 ETH, and gradually decrease it by each block until it crashes to 1 ETH per block over the next 2 years. Meanwhile, Danny Ryan, the lead researcher behind Ethereum 2.0's rollout, stated in a conference call that he and Mikhail Kalinin of the Ethereum 2.0 software client Tiku were exploring ways to create a shippable product that saves some features for later. Currently, Ethereum is in phase 0 of the transition, also known as the beacon chain stage, which will help shift ETH over to the ETH2 network, which went live, of course, on December 1st of 2020. The current model of Ethereum proof of work is essentially operating in parallel beside the proof of stake chain. The next step is to merge the two networks together, which is why the call was partially discussing the merger's logistics. At the same time, Vitalik Buterin is strategizing against the possible 51% attack scenario by attempting to rush another proposal. The Ethereum Foundation estimates that the merger will happen in 2022 in phase 1.5 of the roadmap. However, the comments made by Vitalik, Ryan, and Kalinin suggest that it could be pushed forward sooner rather than later. In addition to ETH developers trying to rush ETH 2.0's rollout due to a myriad of reasons like high gas fees and DeFi. In other news, the Bitcoin price hit a new all-time high over the weekend, crossing the $60,000 price level for the first time. BTC began its ascent early Saturday morning. It then corrected to around $55K and liquidated over $800 million worth of longs after the retail-driven weekend move. So where does Bitcoin go from here? Many seem scared, which could be a clear indicator that we're about to push up. However, support below us at 55K indicates if that level breaks, we could be in for a world of pain in the form of a drop all the way down to 50K, and if that breaks, 42K could be the new floor. The bulls are still raging though, and anything can happen in crypto. One of those bulls willing to buy Bitcoin at prices near the previous all-time high is Michael Saylor, CEO of business intelligence company Microstrategy. Saylor announced last Friday that his company had purchased an additional 262 Bitcoin for $15 million in cash at an average price of $57,146. As of March 12th, MicroStrategy now holds 91,326 Bitcoin, acquired for $2.21 billion at an average price of $24,214. Finally, for the last story of the day, it has to deal with regulations in the U.S. and lawmakers working to make those more clear to the public and projects alike. Representatives Patrick McHenry, Stephen Lynch, Glenn Thompson, Ted Budd, and Warren Davidson introduced a legislation entitled the Eliminate Barriers to Innovation Act of 2021. The law's objective is to establish the jurisdiction of the U.S. Securities and Exchange Commission and the Commodity Futures Trading Commission over cryptocurrencies. The SEC oversees assets classified as a security, while the CFTC is in charge of commodities. Both organizations will be asked for their input per the bill. CoinDesk reported on this story. If the bill passes, it would create a working group to evaluate the legal and regulatory frameworks governing digital assets in the United States. The group would form within 90 days after the approval of the bill. It will comprise of industry experts from the SEC and CFTC and non-governmental representatives from organizations and companies related to financial services and, of course, financial technology to help shape the growing cryptocurrency industry. Thank you for watching CryptoCake Weekly Update. Please hit the subscribe button and tap the bell for notifications so you never miss the week's vital crypto news. I'm BitBoy Crypto signing off. See you next week.